I was reading some quotes to get started, and I always have like an endless amount of quotes on my phone. And I read this one, and I was just thinking about how it relates to where we're at today, right? There's no limit on how much better you can get. Talent is distributed unfairly, but there's no limit on how much we can improve what we start with. Right? I saw this, how many people are Alex Hormozy fans in here? Oh, wow, I didn't see that coming, Caitlin. If you haven't watched it, go watch the YouTube, I think you can find it on YouTube, but go watch that sales pitch he did. For the most recent one was $100 million leads, right? His pitch, he had 500,000 people on there when he was pitching. And so I was watching live. Were you on there live? So I'm watching it live, and you're going to the end, and you're guessing, like, what's he gonna sell? What's the price of this thing? And when he does the pitch, it's like, do you like talking to people? I've got something for you. Do you hate people? Good, I got a product for you, right? Are you an alien? Oh gosh, we've got something for aliens. And he goes through this whole thing, and then you're wondering, like, what conversion, like, will he get? Right? He had the chance, if he would have got a 20% conversion and charged $3,000 for that, he could have made $300 million, and instead chose not to. He's playing the long game. I just think he's going to use it for incubation. He's going to do what Buffett did with companies, except on a small scale. My point in telling you that is he had a quote following up to that event, and he said, the only difference between making the money you want where you're at, he goes, likely your $50,000 investment in you from making that money. And he used the example of $1 million. Like, hey, take whatever you're making if you're not making $1 million. What if you went and invested $50,000 in your education? What happens? Right? It was just an interesting take that I hadn't seen someone spin it that way. And so I'm curious to see, we'll see what Hormozy does. But I couldn't help but think about talent. So I want to open today by talking about opportunity. Right? The market's a little weird. We all get that. We know interest rates are high. All those things we know. But what's the opportunity right now? You can focus on the challenge, right? And we should always obviously think about it that way, but what is the opportunity? What do you guys think the opportunity is? I've got 5 things I'm gonna go through, but I really wanna hear from the room. What do you guys think the opportunity is right now? Just throw it out there. So market share, right? We could go out and today hold the line. Even by holding the line as the market, if transactions go down, you've got market share. Who said something? Recruiting? Recruit talent, that's gonna come up, that's one of them. What else? Assumable mortgage, we talked about a little bit this morning. Yeah. What else? What else are you seeing? Right, we've got to play defense a little bit, but you got to play offense. Right? If you have all the offense in the world, no defense, you lose. But you can't only play defense, right? So I put together 5 different things I'm thinking about today. And right here in the front was the first answer is talent. Right now, you can attract talent to your business, and I'm going to throw this over to my brother, Andrew Franklin. I'm going to try to not hit anybody as I do this, because that could be scary. Oh, great throw, Brett, great throw. So talent, I'm gonna come to him. So talent, right now, there are people you could bring into your world today that you could not have got 3 years ago at a different time, right? Specifically like the mortgage industry, for our mortgage friends, like it is the time. You've got really talented mortgage people that 3 years ago, right, Reggie, would be like we were having a recruiting conference. It's harder. Today though, if you've got a model like what you've got, or you could reach out. What about tech? Right? You can get really talented people. So Andrew and I were talking about talent. How do we bring better people into our world? And I just want to have you share the example that you shared with me before we started. And Andrew, for those that don't know, has taken the hard money lending business to astronomical proportions. It's been awesome to watch, and he's got just a crazy business. And now, after you've done all of that, talk about the talent game that you just played.
Yeah, so January this year, I kept seeing what we were doing on the hard money side and just spending a couple hours a week personally, and then just kicking myself because it's the best business we have and it's been the easiest to grow. My P&L through August was $43 on marketing, so we haven't really spent any marketing. Didn't have
spent 43 though. That's kind of frustrating.
43. I don't know where that was, by the way, like how we spent 43 and not 0, but and I've just been trying to spend more and more time. I actually went to a private lending conference, so I'm just doing a little stuff, but not really moving the needle. And so I had a goal by the end of the year to get 2 or 3 things off my plate so I could be the CEO. And I got a call from a past client of our retail sales business, and he was president of and president COO from there of, which is multi-billion-dollar publicly traded, probably everyone's heard of. He was set to be CEO, take over for the founder. He got there, founder decided that he wasn't giving up the CEO, and the relationship we had was like, I'm not moving my family to New Hampshire to be second. And so they parted ways. He got year severance. 20-year relationship of ours. He calls us about something unrelated, and I'm like, hey, how's it going? And like, I'm no longer there. And I said, let's go to lunch. And as of this morning, we're going through legal docs for him to be CEO of our hard money lending business. So that means what will correlate to in a month is about $1 million on the street. And he thinks we can do that in Houston, San Antonio, and Austin.
All in a business that didn't exist 3 years ago.
All in a business that I didn't know. If a client of mine 3 years ago asked me who a hard money lender was, I wouldn't have been able to refer them anyone.
So I love that. I just think it's such a great example of thinking differently. Right? Here's a business. He's got a business that's crushing it. I want to bring someone in, not you. It's no time on you. Time to meet the person, time to get it set up with this new individual. Right? But that guy is the one that's going to take on that, and you're going to now sit in the chairman of the board role and say, hey, we want to go and we want to hit certain metrics. Right? But you're able to get that talent that would not have been available 3 years ago. So how are you thinking differently about talent? Second thing I want to talk about, which is kind of related to what Andrew said, debt. There's cycles out there, right? If you bought real estate from 2011 till right now, did you do well? We were in the greatest, I haven't done the day, I couldn't imagine a better time frame in history from 2011 to right now to own any piece of real estate. It doesn't even matter what it is. Take a dartboard in San Diego, buy anything, you crushed it. Now you're entering, like, there's debt cycles too. There's times where owning debt and strategic debt has the biggest benefit to you. I think it's today, for the reasons Andrew cited. I bought the least amount of real estate I've ever bought in the last 18 months. I've done the best loans with the highest yield and lowest risk. I've done the best loans, personally, the ones I'm lending money to others, in the last 18 months, by far. Specifically the last 6, it's gotten even better. Right? Better loans. On the secondary market, when I'm buying debt, I bought the best debt I've ever purchased. Lowest risk, highest yield. Right? So debt is a vehicle right now that you could think about. That's one of the opportunities today. Third opportunity I'm thinking about in our business. I had a little mastermind here this morning. We talked about it for a second. How do you take your biggest expenses in your P&L? So when you leave here today, go back, take your P&L and sort by vendor. Should be easy. If you're using QuickBooks, it's really, really easy to do. Jax could walk you through it. It's a Who's Outsider in here. And pull all the vendors you paid, and I would go in order of who'd you pay the most to. And how could you take that expense in your business and turn it into profits somehow? Right? Get it to break even is the minimum goal. How could you actually make money off an expense? How could you do that? Just think about it, and we'll give some examples tomorrow on that. But there's something in our business I look at. We didn't have to do this, though, the last 3-4 years. Dan and I were talking before this kicked off. We're like, hey, 2021, let's all be honest. I know we were all working, but wasn't it easy? Like, if we really are objective, we probably didn't know it was easy as it was. But looking back, don't you look back to 2021 and go, this was really easy. Today, right, I wasn't having how do I turn my biggest expense into revenue in 2021, because we just had a printing press in our office. Right? We were just printing cash. But today you could I should have been doing that then, but I wasn't. So how can you take your biggest expense, turn them into revenue? Next is math. How is math one of the opportunities? You've got to get back into the math of your business today. In 2021, it doesn't matter you're printing money. Today, you need to know, like, your net margin is a percentage, your expenses as a percentage of revenue, right? Your cost of goods sold. How does that look versus a year ago? How does it look versus last month? And what's that year-to-date average? Right? We've got to get into not only the business numbers, what about your personal numbers? Are we looking at what we're spending at home? Like that burn rate, it's really easy to creep it up from 10 grand a month to 15 grand a month to 35 or whatever your number is. But it's time to get back into our math. And the math sometimes today doesn't make sense. For those that, I've never been like this huge social media mogul, but like math doesn't make sense. I made this post the other day, and Cole and I are really trying to crush the social media game, and we'll spend 5 hours on a post, and it'll get 3 likes, and like 2 of them are my mom. And then I make a joke about Airbnb, and I don't know if you guys saw this. It got 26,000 likes, 6,200 comments, and 1,500 shares. And all it is someone else's photo. I was like, I just made this addition to my Airbnb, and my bank account's not going to be big enough to handle all the revenue. Just something stupid that worked. It just doesn't make sense, right? It was supposed to be a hilarious joke on how math is something we've got to work on. All right, acquisitions. Lots of people I've talked to in here, their retail team might be slightly off, yet their investment business is radically up. Right? Our retail business will be down a little this year, we're fighting really, really hard to push to try to match last year, our investment business will likely be up, right? And the only reason it's not radically up is because we hit pause in October when the market got a little weird and we didn't take down as many projects as we would have, right? But there's a lot of folks in here, Kobe being probably the standout, whose investment business is up 600% this year, right? Or more, it could be a higher percentage, right? So the investment business out there today is hammering. I was talking to Joe about that before we started, right? That's your opportunity to go back, and we're gonna spend some time on that as we go through this. So if you'll open up your workbooks, we're gonna talk about how do we crank this investment business? How do we know what we're looking for? You guys are all familiar. The whole point of this room is to operate like a family office. There's 8 ways we think about it. You guys have seen this if you've been in our portal. For those of you who've been with us a while, we know that everyone in here is running a family office. Historically, that had been held out for the people that have hundreds of millions of dollars, but everyone in here can run the same family office as the really, really wealthy. The tools are there today. You can absolutely do the exact same thing. And so when you think about your deal hierarchy, you think about cranking your investment business up, and I want to take my wealth to the next level. There's 2 main tracks to think about. You've got your business management. How do you go get your core business making more money? That core business creates cash. That's the fuel that allows you to do more investments. And there's this beautiful marriage that occurs between your business management and your investments. And so anytime you're out there, whether you're looking at a piece of debt, you should always ask, how do I be the principal in the transaction? Right? Selling a lot of anything can make you a lot of money, but owning lots of assets is what makes you wealthy. So how do I go buy it, control it? If I can't do that, how can I monetize that? Can I flip it? How can I get better at that side of the business? I share our numbers for the last 18 months, not because they're incredibly impressive, but it's what's possible. There's people in this room doing way more than that now, right? We've done 380 investment transactions and since 2022 to now. It's kind of cut off, but it's 184 quick flips. We've assigned about over $4 million worth of assignments. We've made $3.2 million in flips. We funded $22 million in hard money loans. We bought 20 new rentals, and we did 13 notes. Right? So if you're going to do that, like this model and having done this for the last 14 years allowed me to do some really, really cool things. And everyone in this room can do the exact same thing. And so the premise that I want to talk about in this afternoon session first is how could 4 transactions a month totally change your entire life? And what would that have to look like? And if that's where we're going to go, we got to start with what are the transactions we want to do. So if you open up your workbook to this page, and I'm going to have you work on this. I'm going to give you about 5 minutes to work through it, but I'll explain it. First thing we're going to do is what are the transactions you're actually trying to get? This ties out to your wealth plan, right? You're all out there chasing net worth. We're trying to grow our net worth to create passive income. What are the actual transactions we're looking for? In other words, if Dan goes out there and he's like, dude, I will buy 1,000 of this thing. What is the thing? Is it a single family house? What's the age of it? So if you start at the top, what is the property age? That's likely going to be a range. Is there a certain age of property you actually want? Does it need to be a certain amount of bedrooms? What about bathrooms? What about square footage? Does that matter to you? Is too big a problem? Is too small a problem? Right? Lot size, does that matter? Does ARV, the value? Do you only want to play in a certain price point? What about too low, too high? HOA, does that matter? At what point would that matter? Then I want you to think through your location. What are the yeses? So Taylor, what is the location you're like, oh, that's 100% a yes? What's the no? Like if it backs up to a commercial building, backs up to an apartment complex. So I want you to go through that. The same thing with condos. If you're playing the mobile home game, like a handful of us are, mobile homes aren't gross. We got to tell everybody out there, it's gross, disgusting, don't do it. We flip a lot of those here, we crush it. So then what if you're doing something else? Take that same methodology if you want to buy a mobile home park. You want to buy an apartment building, right? What are we actually looking for? Think property characteristics only. I'm going to give you about 5 minutes. Go fill this out. You'll need this for the next thing we're going to do. So I'll give you 5 minutes. We'll give a little bit of thinking music from our crew back there. Go through and really think, if I was targeting these from a marketing perspective, and I could give you hundreds of these transactions, what exactly do you want? What do you want it to look like? Give you about 5 minutes to work through this. We're going to come back and talk about it. Come back in, let's chat about it. Ready? 1, 2, 3. So let's talk about it. Let's talk through this as a group. So can I buy it? Net operating income. That's you take your total rents, let's assume it's bought all cash. You subtract property taxes, insurance, HOA, management, vacancy repairs, right? All cash. What's the net? Does it need to be a certain number? I think there has to be a number you're playing for as a minimum. Right? So you might say, hey, this makes $4,000 a year. Is that enough for you to care? right, on a smaller house, smaller deal. Some people in here might go, hey, I only want it if I can make 30 grand a year. No, I don't want to play for something smaller, right? Cash on cash returns to the right, if you have debt on it. If you're going to take the risk of debt, what return do you want? What's the minimum you'd accept? Yes, I do. So on cash returns, if I'm going to lever it, I want 15%, 1.5. My target's 20. Goal's 20, 15 would be my cash flow number. I will not do an investment deal that doesn't net $400 a month after debt and everything. Cash flow, $400 a month. It's got to go in my pocket. Why do I need at least 400? Because something's going to go wrong. And I'll see people argue like, hey, I'm getting $200. I'm like, you have an AC unit go out. Let's think about that for a minute. AC unit goes out, which happens all the time, and you spend 10 grand putting it in there. If you have $200 a month, you just wiped out your cash flow for years. You have a huge turn, right? The higher the cash flow number monthly, the lower your risk on a turn.
Is that on true expense? Are you factoring maintenance and vacancy on that and say 400?
So the cash flow number, right, until if I buy something I don't know exactly the expenses yet, right? So I assume that whatever the monthly rent is, I'm going to spend 1 month's rent throughout the year in repairs if I landlord really well. So if I'm renting for $2,500, my dream scenario, I'm going to spend $2,500 throughout the year in repairs. I also assume it's going to be vacant 1 month every single year. If you landlord really well, it's easy to beat that number. But after all of that, I've got to get to $400 a month. So today, when I'm looking at my portfolio, when I look at an investment, I have to put, if I'm going to take debt, I have to put way more cash down. Way more. Like my deals won't work with 20% down today. So in early 2022, there was a bank here, you could pay points and buy it down. I refinanced like the bulk of my portfolio at 3.5%. And I paid a bunch of points, and even the bank was like, you're such an idiot to pay all these points down. I was like, I don't know, 3.5% seems awesome. Now today it looks really, really good. I didn't know that, 30-year fixed at 3.5 on the majority of my debt. But I can buy a 6.5% cap rate property with 3.5% debt and make a ton of money. I can't buy a 6.5% cap rate property with 8.5% debt because every dollar I borrowed, I'm losing 2%. So if I'm going to do that, I'm going to take debt in that scenario. I have to put a tremendous amount down to hit my numbers. And the reason I'm going through this exercise is I'm on a lot of calls and I see people like, oh, I've got a great deal. And I look at it and I'm like, this deal's shit. Like, you should not be doing this deal financially. But yet they're arguing for it for a variety of reasons. There's no model to it. The expense load, my number, the target on an expense load is 35%. 35% is the number you want. That's taxes, HOA, vacancy, repairs, management, HOA, divided by the rent. The expense ratio matters. Your rents are somewhat capped, right? We can't rent something. If something's a $2,500 per month rental, I can't rent it for $4,000. What I can control is my expenses at some level. Cap rate. Now, to Josh's point earlier, does it matter what's going on? Does it matter? Does long-term debt rates matter on cap rate? Hell yeah. I can't buy a 6.5% cap rate today at 8.5% debt. Or if I am, there's got to be a reason why. It's got to fall into the other. Like, hey, if I can get something at a 20% discount and it's in an area and it meets all these other things, right, that can be your exception. But we're trying to avoid the exceptions in our investing. Second one down, when I go to a promissory note, when I create a note, my minimum return is 15%. My target's north of 20. Kathy. Hold on, we're going to give you this. Thanks, Michael.
Do you have a target for your cap rate above the mortgage you're paying?
It's a really good question. In a dream world, 2 to 3% spread, right? I just want to operate like a bank. That's what they're doing, right? They're making a spread between the long-term debt rate and then whatever I'm actually getting. So the bigger that spread, the better I get. Having a negative spread, right? There's positive arbitrage, neutral arbitrage, negative arbitrage. If your cap rate's 6, you're borrowing 8.5, you're taking on a lot of debt, it's hard to make money. All right, then you go down to wholesale fee versus flip. What's your ratio? So Parker's got a good one. Milliard, will you throw Parker the mic? So Parker, when you're going to go wholesale house versus flip it, versus I'm going to say wholesale, flip, what's your ratio? If you could wholesale something for $15,000 as an example, what would you want to make to take it down and sell it and do no repairs?
For a wholesale, it would be 2x with a minimum of 35K.
So I love that. 2x, so I want to make 30 grand, but I have a 30 grand in that example of 15, but he's like, I wouldn't do that because I still needed my minimum.
Yeah, so got to meet both rules.
Okay, what about a flip? What does it have to be relative to it?
35K minimum again, 15% ROI minimum, and 2.5x the wholesale fee.
2.5x the wholesale fee.
I've gone down to 2x, so I guess we'll call it 2x.
So we have a loose minimum
Yeah.
sliding scale.
Yeah.
The reason why it's important, I'll see people go do a deal that they could have made 30 grand on to sell someone else the contract. They'll go do the whole transaction, and then they'll make 25. Right? And you could send it out to your list. So everyone should be looking at that. What is really driving my math? The idea being here, we're going to go back and we're going to build out the deals you're looking for. If you go do 48 deals, and they're all going to be different things, don't you want to only do the grand slams that you take down and flip? Like, shouldn't you be looking at only the best ones? And then let someone else do the deals that are just average, which provides you more cash to go get what you wanted somewhere else. Any other thoughts as you went through this? And the last one is just, what about is there a profit minimum on a flip? I like Parker. He said, what is your minimum on a flip? Parker, you said 35?
35.
So ours would be 40, right? In that same range. I just don't want to do a flip where there's the opportunity to make less than that. And then what about your capital? When you invested, is there a return you want to get on your capital? Anytime if I'm working it through a flip, I want to see that. I mean, your return on a flip, if you think about it this way, if you have money in, money out in 90 days, and you could make a 20% return, you could turn that capital 3 times per year, which would give you a 60% annualized rate of return. Now, it's an operational business. We actually got to do work to get that, but that's the real numbers. You see that all the time. Like on our flips that we play for, a 20% return on the asset's very common. I'll see people, though, do a flip with 10%. And here's the risk there. If you do a flip with 10%, what's the average price reduction that you need to actually move a property? 10%. So now I just went from making money to breaking even at best. Right? Just one. So if I go for 20, if I'm totally wrong, I'm going to be able to, I can be wrong twice.
One thing I haven't looked at is ROI based on like my cash actually in it. Like if I'm using a hard money lender, I was curious if you ran that differently, because obviously that would mess with the percentages. I've been running it as just like all the cash needed for the deal, purchase, closing, rehab, et cetera.
So really, you have to subtract your cash out because you could have lent that to someone else in here and not done the deal. So you've got to there is a cost to your money. There's an opportunity cost to using your money in a deal. So that is another factor into it, right? You've got to subtract that out to really think through that. Because if you could assign it and make 20,000, this example, and you could flip and make 40, but your cost of capital was 12, you're really only in that example making $8,000 to do all the work. I see a lot of people doing a lot of work to not make a lot of money.
So let's say, give me an example to wrap my head around it. So 150 is your all in on the property, purchase and rehab. But let's say I have to put in 30 and I'm getting the rest leveraged. Would I be wanting the flip profits to be 15% of the 150, which is what I've been doing, or 15% of my cash in, which obviously it's going to meet that every time?
Your return on your cash, your number is going to be crazy in this example because you put in a small amount of capital. I would look at it I pretend I paid cash. What's just the return on the asset? What is that annualized?
Got it.
Now what's the return on my capital? I would do both. So here's how I think about marketing for these, right? You start out, everyone in here, you already have an audience, you have a way to go after these. Utilize your team, your current database. If you're not doing this right now, do this. Now, if you want to go to the next level, you're going to pull data around what you exactly wanted. You're not going to violate the do not call list, but you're actually going to make calls to the properties that were on your exact list. You know the square footage, you know that you're built, you know the area you want to be in. Are you targeting the exact thing that you wanted? The third level of this is you could outsource it. You could have someone else making these calls for you. And I think if you really want to scale it, you land down here around marketing. Do you want to do pay-per-click, direct mail, radio, TV? And overwhelmingly, our budget today is direct mail, probably 90% or maybe 10% PC. Parker, who just left, or Parker's in the back, you do radio, right? Parker's got some radio. So if you want to scale it, you're going to go, some of those channels are more targeted than others. So now the last thing I would tell you to think about, I would have never believed 5 years ago that we would work in all these, and we just added Yuma to it. So we work the entire state of Arizona. So I was talking right here with you, and you're like, oh, I don't know that I want to go outside of my area, have a super high price point. Yeah, but what exists within a 3-hour drive? Is it hard to go 3 hours? Yeah, it's less than ideal. But what if all the opportunity, lower price properties, just different markets? There's also a lot less competition out in Pine Top than there is in Phoenix, Arizona. So what opportunity exists for you that maybe it's a little far out, a little harder to get to, but what is that opportunity? How could you uncover that?